Welcome back, everyone, to the Risk Intel podcast, powered by SRA, where we share risk intelligence from experts across the banking industry. I'm your host, Ed Vincent, Executive Vice President at SRA. Welcome to part two of this discussion on navigating FinTech-bank partnerships. We're joined by Alex Barrage and Ryan Richardson from Davis Wright Tremaine. We left last week's episode discussing regulations for banks and the importance of monitoring and oversight for their bank affiliates. For a recap, check out our blog summary on srarisk.com. Let's dive in today to get the details on how banks can best comply with these regulations. I think we've talked a little bit about this, but I'm going to go a little bit deeper here into the key areas where you feel banks need to pay particular attention in order to meet these standards and what they need to consider in those areas, right? We talked a little bit about the kind of affiliate relationships, and so I get that this maybe moves out beyond the bank out to all of those affiliate entities. But can you talk about highlight a couple of areas? I know that you've developed a tool that is comprehensive. Let's come to that in a second, but perhaps start with one or two areas of particular interest and talk about the considerations that both the bank and even the fintech need to have with respect to those areas.
Ryan, you want to start?
Sure. Well, how about I'll call out one, and then I'll hand it over to you. You can call it your top or top two, top three.
Okay.
I think the primary area that I have sort of been focusing on a lot with my own clients on the fintech space, on the fintech side of the relationships in particular, is just around like a preliminary diligence, right? And I think there's been a long and an understandable sort of understanding in the market that diligence is a one-way exercise from the bank to the third party. And that is certainly a critical component of diligence. You know, a bank getting an understanding of its potential partners' readiness for, to undertake certain regulated functions, AML included, or say, credit risk decisioning, et cetera. What does the technology already look like there? What do their controls look like? What is their own internal ongoing monitoring and remediation looking like, et cetera? And so that is an exercise I think that the market expects to happen, and that has been going on sort of since time immemorial in these relationships. On the fintech side, one thing I am counseling very closely on with many sort of growing and sort of more sophisticated fintechs, or fintechs that are more sophisticated today than they were yesterday, is to be ready for that exercise from day one, right? That this is not something that you should sort of make up as you go along. Like you've done this enough now. That you need to be prepared for this in a way that shows that you take it seriously and that you have an understanding of what your bank partner will expect from you, and to to generate documentation or responses to sort of typical diligence requests on the fly. Not only just takes a lot of time and slows down the process, it's like not good from an operational perspective. It itself presents a picture of additional risk to the bank that is sort of undertaking that diligence exercise that's probably not helpful to you. You may end up with less favorable contract terms than you
Right.
would have if you could have just been ready to go from day one.
Yeah.
So I think that's sort of one piece of sort of diligence focus that I've been talking about a lot with fintech clients. The other is, importantly, that diligence should be bilateral, right? Like diligence should be going in the other direction. And that fintechs should be, and service providers generally, enterprise service providers, but particularly fintechs, should be getting a clear picture of the bank's readiness to undertake its oversight and supervision obligations. And again, let's go back to what we were talking about before, the particular component of monitoring. Like, well, what does monitoring actually look like for that bank? Like, once I submit a daily file of XYZ, new customers onboarded, daily KYC file, or a daily transaction file, or a quarterly risk file, et cetera. Where does that go, and what's being done with it, and who is reviewing it, and what's the decision-making process behind taking action based on that information? That will not only give you a clearer picture from the outset of what sort of change management and control management is actually going to look like on a day-to-day basis, contract aside, putting the agreement to the side, like what is this actually going to look like on a functional basis, and it will give you some sense of confidence that a bank sort of really knows what they're doing in the space and that they take it seriously. So those are the sort of primary areas of focus coming out of the final guidance, and sort of as we've thought about the tool that we've put together for both banks and fintechs, where I've been spending a fair amount of time with the fintech side of the equation in particular. Alex,
that's fascinating. Before you jump in there, it's fascinating there, Ryan. If a fintech demonstrates readiness, if you will, that can become a competitive advantage, right? That can accelerate their onboarding process, quicker to value, quicker to revenue, and all the great stuff that goes with that. And conversely, if they don't, as you said, right, that illustrates something to the bank itself. So I was talking to Bass Bank recently, and they were talking about the cost that it takes for a fintech to be SOC 2 compliant, for example, and that is a significant investment for that fintech to make. But the bank's view was if the fintech is not willing to make that investment, then that's indicative of the mindset and other controls. And so I think that to your point there, you present a lot more of a robust picture, then you're a more favorable partner. So I think that's a really great dynamic there. And then I think that the other point of the bilateral view there is fascinating because, right, this is a two-way street. And if you as the fintech partner up with someone that you pass all this great information up, but it's not monitored, it's not actioned, it doesn't have the bank does not have a robust risk management framework, then you're exposing yourself there as well. It's one of the things that we certainly, we've developed a risk maturity framework for the banks to evaluate their risk management, fintech risk management programs. It's for exactly that purpose, and that'd be a great thing to be able to show to the fintech. We talk to banks about showing to the regulators to show readiness. It'd be interesting to show something like that to the fintech as well to illustrate, oh, here's where we are in that journey. So great, fascinating points there on the diligence front, Ryan.
I think that's exactly right. And before I hand it over to Alex, I'll just sort of add to that. Some of our bank clients, I think, have been understandably resistant to open the door on specifics of monitoring and control processes, right? I think there's like a confidentiality concern there, understandably, and just sort of like a secret sauce concern, right? Like this is our risk sausage making, and we don't want to share it with anybody else. I think though that if banks would be well served to find a way to get comfortable with the right level of information to share, because it will not only, I think, lead to smoother contract negotiations. It will lead to smoother day-to-day relations, and sort of it sets expectations better for how the relationship is going to work on a day-to-day basis. And so, you don't need to be sharing confidential supervisory information or anything. That's not part of what the ask is. But to understand that, particularly when dealing with sort of mid-stage or later stage fintechs that are more sophisticated players, many of which will have multiple bank partners and have done this plenty of times before, being open to treating diligence as a bilateral exercise is a very productive way to kick off a relationship.
Alex, we did a deep dive there into the diligence piece. Is there another area that piques your interest here, or that where you think that there's a particular level of attention that needs to be paid by the banks?
Yeah, so let's start with your great term, competitive advantage. I think what gives fintechs the greatest competitive advantage, in part, is being best in class on all aspects of compliance. Yeah. I can't emphasize that enough. And that's hard, right? Because that's a significant cost. It's something that constantly needs to be managed and monitored and amended and upgraded as events unfold. But it's incredibly critical. The other kind of thing that is more inchoate, but equally important, is taking the time to understand the language of risk as banks and bank examiners think about that? Of course, part of that is reviewing and understanding the final guidance, right? It kind of feeds off what we were talking about, this bilateralism on diligence. It's almost like a bilingualism. What is the language that my partner is using to risk manage itself? How can I learn and benefit from that mindset? I'm not a bank, says the fintech, right? I don't have that business model. But are there ways I could leverage the things that I'm doing as I enter into a relationship with a bank partner that helps that bank meet its regulatory compliance requirements? How can I be an ally? Things like that are really important to think about. Fundamentally, understanding the risk management life cycle, understanding the language of risk. The big question, I think, on our minds is, what does this mean for fintechs, this new kind of scrutiny that we're under? What a lot of fintechs don't know, and what we educate them about, is something called the Bank Services Company Act. It's actually an act that's been in place, I think, since the early 1960s, believe it or not. And it basically authorizes the banking agencies to regulate and examine the service providers themselves, those that are providing services to the banking institutions. It allows them to potentially regulate and enforce actions against those fintechs. A lot of third parties just are completely oblivious about this. In fact, there is a manual that you can find online for technology service providers, detailing across many different topics, things like management and governance, client services, and a whole bunch of other data security and other matters, detailing, if you're a service provider and you get examined, here are the things that are potentially in play, and here's how we're going to rate you. So I don't know that that's a tool that's been utilized very much or very broadly in recent memory. There are enforcement actions and public consent orders out there that you can find against service providers. I don't think there are many of them, but they do exist. And so just educating yourself, not just on the language and on the life cycle, but what do I potentially expose myself to as a fintech if I get into this relationship? And what could that mean for my business? And how should I be prepared for that eventuality? It seems like maybe it's like overboard, I don't know, extra credit, but it matters. It matters a lot.
It seems like it's extra credit until it's not, right? Until the regular goes up, and then all of a sudden, wow, that's a hard thing to recover from.
Right.
I think, and even before the examiner shows up, right? I think a lot of this sort of exam-related counseling and advice that Alex and I give is to fintechs is sort of in the course of responding to sort of ordinary questions that come in from a bank while it's under examination or while it's sort of getting ready for an exam or in the period after an exam. And I think being able as a fintech to know to be able to sort of spot the issue, right? Of like, well, what is actually going on in the background here? Like what question do we think that the regulator asked of the bank? How is that then being translated in a game of telephone from the bank to the fintech? And so how am I able then to sort of try to spot that issue and directly respond to the sort of underlying supervisory regulatory inquiry, whatever, versus responding in your own vocabulary, which then gets passed in another game of telephone back through the bank to the regulator, examiner, or whoever. That can all of that game can lose a lot in translation. But if you're able to speak that language from the start, then the bank feels, I think, sort of less inclined to need to edit responses and can sort of more quickly, more adeptly pass them right back. And we're off to the races with a response that's directly responsive to an examiner's question. Truly, the amount of time that gets lost in that tri-party, sometimes quad-party, game of a sort of daisy chain of communications, and the amount of vital information I think that gets lost can be really, really overwhelming.
Yeah. It feels like there is still a lot of education that is needed here in this space. clearly the market is moving quickly, and so any time that's the case, right, it's hard to keep up. And I think this is a particularly interesting situation, though, because now there is some regulatory guidance that is out there on top of the natural movements of the markets. I'm guessing that was kind of the intersection of these dynamics was behind the creation of the third-party risk management lifecycle tool that Davis Wright Tremaine has created recently. So perhaps we can just touch on that a little bit as to what was the thought process that went into creating this tool, and give us a little bit of context as to how you envision people using it going forward as well.
Yeah, so I would say our thought process on the tool was an evolution in many ways. And part of that evolution, at least personally for me, was inspired by an event that I attended, which I'll touch on in a minute. So we knew when this final guidance was coming out that we needed to be on top of it, just like all our other friendly competitor law firms. We wanted to take a little bit more time to not just summarize what was in there. We wanted to be thoughtful about it. We want to go above and beyond, and not just pair it with the guidance says, but actually help our clients, both fintechs and banks, kind of take the guidance to the next level and give them something more active, something that they should actually do or consider doing as a result of the guidance. And so, the life cycle structure kind of lends itself to different categories of things. We essentially started a grid, and part of the grid was if you're a fintech, and part of the grid was if you're a bank. And it was like, what, Brian, like 20 pages of single space charts, which never in a million years would we send to anyone except ourselves. So we had this moment where we're like, we feel kind of late. We haven't gotten it out yet. And I remember Ryan saying to me, you know what? It's more important to do a great, amazing job and take longer than to get something out that maybe isn't as good. And I happen to agree with that. So as this was unfolding, and we had a team of folks working on it, wasn't just Ryan and I want to shout out to our counsel, Aisha Smith, and our partner, Mike Borja. We kept kind of leveling up. And at this time, I attended an event at Google Cloud. I was invited to speak, and I was blown away by everything that I saw that day. It was super polished. Everything was like so well thought out. And it made me think, maybe there's some part of this day that I can bring back to this tool. And so I said to our team, let's do this a little bit differently. Let's actually make this interactive. And then Ryan said, I think maybe actually interactive was Ryan's word. And so we were trying to figure out, because we're not like maybe the most tech savvy people, or at least I'm not. How do we make this easy for clients? How do we take this single space Federal Register notice that's upwards of like 35, 40 pages and like just give them what they need and then give them more? So now I'm going to turn it over to Ryan.
Yeah, I mean, that's a good and accurate description of truly the even our own thoughts once we got them into 2 columns for banks and fintechs, honestly felt as long as the guidance itself. So we had to get it down into something that was more digestible. And sort of, yeah, then in addition to the shout outs to Aisha and to Mike, Davis Wright, we're very lucky to have a team of like great in-house designers that work not only on our sort of public websites, but also this sort of content. And they were able to help us put this into a document that had some nifty features and tools to it, or features and sort of interactive components to it to turn it into a tool, I think, that is like very easily navigable by different audiences, including banks and fintechs. And so, yeah, I mean, if you're able to take a look at it, there are sort of modals for each of the sort of pieces of the cycle, right? From planning to diligence to negotiation to monitoring to termination. And then there are little clickable buttons down below. So if you're a bank, you click on the bank one. If you're a fintech, you click on the fintech one. And it'll take you to sort of dedicated page of information that not only summarizes the guidance, but tries to give sort of actionable steps or sort of bullets of additional thoughts to sort of put the principles into practice. This again is one of, like, sort of going back to an earlier element of our conversation. This is one of the challenges of having a set of principles, a principle-based guidance, right? That it doesn't really say very much about operationalization. And so this tries to at least start our terrific bank and fintech clients on the road to thinking about how to actually implement this in a meaningful, functional way that achieves the sort of principled objectives that are out.
Yeah, and I don't think when we did this, we would have anticipated the sheer amount of positive reviews we've gotten from all corners, including regulators, actually.
Yeah.
I'm not going to mention them by name, but to me, that is like, in many ways, the most sustaining and satisfying response of all, beyond our clients. And so, like, it kind of just, I don't know, it happened. We're proud of it. We're not done, right?
Yeah.
And so when we got to talk to you guys and get your comments, it just made sense to partner on this, like, given the tools that you guys have and the contributions that you have on this conversation.
I appreciate that, Alex, and certainly we're excited to be part of this as well. And I think that we all share this view that we're looking to improve the safety and soundness of the industry as a whole, right? And that's right. I think that the regulators' reactions there, as you talk to, right? This is designed to help everyone, and so we're excited to help bring this to market. And for those folks who are interested, you can go to the dwt.com website or the srarisk.com website. You can get to the link to the tool here also through the link within the transcript to this recording in the blog post as well. So we're excited to get this out in front of folks, and hopefully, right, what this does is it leads to dialogue, right? And that's the point, right? There's an element of this where the principles can be conveyed, but ultimately then there are conversations that need to occur around how do you put this into practice, right? Whether that is tool sets, right? Whether it is evolutions of methodologies and process, or advice in specific situations. So we're certainly excited to be part of this journey together. I'm conscious that we've taken up a lot of your time today, but I will ask perhaps in closing for each of you to share one or two anecdotes of the types of questions or inquiries that you're getting from, whether it's from a fintech or from a bank these days. When and I know we've talked about a lot of the themes, but are there questions that you've gotten recently that you think that others should be aware of, and other things that people in the industry should be thinking about? Ryan, maybe we'll start with you, and then Alex, you could close us out.
Sure. Yeah, happy to. I think one, it's sort of perhaps surprising question that I've gotten a couple of different times both from the fintech side and the banking side, but maybe even a little more from the banking side, is how to think about planning as distinct from diligence. So sort of looking at the life cycle, it runs through several stages, the first of which is planning. And I think if you look at the guidance, in fact, planning sort of like is effectively a summary of all of the sections that later follow, from diligence to monitoring to control and termination, et cetera. And so, I don't think there's a right answer to this for that's applicable to every institution. But I do think it is easy to, because you see the same content appearing in the planning stage, as appears in later sections, including diligence, et cetera, to say, well, that's an overlapping exercise. I don't need to think about that. And I, in as much as there's not a right answer, that probably is the wrong answer, to say that you don't need to think about it at all. I do think, depending on the size of your institution, the nature of your third-party portfolio, whether you're new to it, whether you have a long ongoing business, sort of how dense and complex or detailed that planning exercise needs to be will differ from bank to bank or from fintech to fintech. But it is important to think about all of the subsequent aspects of the life cycle in the planning stage, at least at some level. And to, for example, to wait to get into contract negotiations to think about what your strategy is going to be on termination. It's not too, you can do it at that point, but you're on your back foot. If you have a strategy on what, if FinTech needs a termination right for convenience at X days to be able to accomplish some sort of wind down and transition to another service provider, those sort of tactical objectives that then lead to a strategy on those types of, somewhat detailed issues will really, really serve you well. You can be flexible on it. You can have multiple approaches. If lever Y is pulled in negotiations, well, we'll lean on lever X instead. It's fine to be flexible, but to have no strategy until you get there is it's just going to take more time, increase cost, and likely present more risk at the end of the day in the final relationship.
Yeah, so I'm going to hit this from a slightly different perspective. First, I'll take it from the fintech side, then I'll end with the bank side. If regulators listen to this podcast, hopefully they will, I would want them to know that fintechs, and there are many of them, obviously, many of them are frustrated. But there's a good bunch of them that want to do the right thing, even if it's costly to them. Do they want to do the right thing because they're good-hearted? Some of them do, yes, but they realize if they don't do the right thing, to Ryan's point, their agreement could be terminated because the bank examiners don't think the bank should be involved in the transaction, the partnership. So whether it's for altruistic reasons or business reasons, the point is, fintechs many of them want to do the right thing, and some of them, in fact, I'm counsel to an advisory board that was recently set up at a BaaS provider. They are taking the steps. They see the writing on the wall, and they're trying to get ahead of this. They're trying to figure out how can we be best in class. I think that's a terrific, very new and innovative way to deal with these issues, and I'm proud that our firm is involved in that. From the bank's perspective, I think they want to get ongoing monitoring right. I think for the smaller banks, opposite the very big, fintech partners, that's extremely challenging from a resource perspective. And I think in general, community banks might feel a little bit left out because they want to play ball too, but maybe the guidance doesn't quite get to them. And so hopefully we will have some more bespoke guidance for the community banks and MDIs and CDFIs who want in. But if you're a bank and you need to be doing ongoing monitoring of your fintech partner, how can you do that in a way that is resourceful and that has economies of scale? What is a tool, perhaps, that can aggregate data for multiple community banks in that situation to help them meet their safety and soundness and risk management needs? To me, that is a pretty big opportunity. Whoever can solve that and scale that is, to your point, raising all boats, Edward. Yeah. So I challenge anyone who's listening who might have some good ideas here to iterate on that. I think it's good for everyone.
Thanks, Alex. I mean, just a fantastic perspective there. Certainly, that resonates with someone who works in a business that is providing software solutions to try and accomplish just that. I think that's a big part of this. And so we have covered a lot of ground here today. I really appreciate it. I have pages and pages of notes here myself from whether we're going to see more fintech exams, driven by the Bank Services Company Act, to whether to our readiness for bilateral conversations and our bilingualism, learning the language of risk and principle-based approach that's coming out of the guidance here, and as you said there, Alex, in those some of those final comments around whether or not there is an opportunity to extend some of this into the community banking space, right? Which is, looking for some guidance here as well. So I appreciate you covering such a wide expanse of ground. We really value, the expertise that you brought to this discussion today. I also appreciate all the legwork that has gone into building the third-party risk management tool that you have shared with us today, and that we're excited to take out to market together. As a reminder, go to dwt.com or srarisk.com to get access to that. Alexandra Barrage, partner in the DC office for Davis Wright Tremaine, and Riley Richardson, partner in the New York office for Davis Wright Tremaine as well. Thank you very much for your time today. Greatly appreciate it.
Our pleasure.
Thank you so much.
You.